I recently received a question from somebody. They asked me that if I can afford £2,500 in rent, why can't I get a £2,500 mortgage? Now, they asked this question because this individual was paying rent of £2,500 for about 2 years. And when they went for a mortgage, they were rejected, but she couldn't get her head round why she was not able to get a mortgage that was £2,500, whereas for 2 years, she'd be paying rent for £2,500. I hope that makes sense. So on the face of it, it sounds fair. But renting and buying are assessed very differently in the UK. First, how are mortgages actually working in the UK? Or how do mortgages actually work in the UK? Most UK lenders will lend you around 4 to 4.5 times your annual salary. So if you earn around £50,000, the maximum mortgage you're likely to be offered is roughly around £200,000 to £225,000. Even at the top end, you're not getting anywhere near the £2,500 monthly mortgage payment on that income. Now compare that to renting. For rent, landlords typically want income of around 2.5 to 3 times the annual rent. So £2,000 a month rent is about £30,000 a year. So a landlord might be happy if you earn around £75,000 to £90,000 a year and also have decent credit and have past referencing. And crucially, landlords don't usually care about other debts, your car finance, student loans, credit cards, as long as you pass affordability checks and rent gets approved. Now let's look at the buying side of things. A £2,500 mortgage in the UK is not just a loan. It includes your capital and interest, plus council tax you have to pay, utilities, maintenance, and service charges, of course, if you live in a flat. But more importantly, lenders don't look at the payments first. What they actually look at your income, they look at your existing debt, and they look at the stress-tested interest rates. To comfortably support a £2,500 mortgage payment in the UK, you'd usually need a salary well north of £100,000, depending on rates and circumstances. That's because lenders test whether you could still afford a mortgage if interest rates rises. So here's the takeaway. Being able to pay £2,500 in rent does not mean you qualify for a £2,500 mortgage. Rent is based on affordability today. Mortgages are based on long-term risk and income multiples. That's why if you're serious about buying, the two biggest things that matter the most are increasing your income and reducing your debt, not just proving you've paid higher rent in the past. That's the bit most people miss, and that's the part of it really that's most important, right? So I hope you've answered that. I hope I've answered that question. And if you are as well considering getting a mortgage or whether you can afford it, please feel free to reach out to us. And also, if you like this content, share it, like it, share it with your friends. Listen, I hope to see you in my next video. Take care. Bye.